Sandeep, and Sydney.
Great, thank you, Cheryl. So we're going to kick things off before we introduce Sydney with a cheat sheet. You may want to screenshot this. I'm going to be very brief here. Just some keywords as we get started about how angel investing just basically works from a very basics perspective. Angel, traditionally an accredited investor, before Republic, provides funding for a startup, often in exchange for ownership of the company. An accredited investor is someone with net worth of over $1 million or an annual income of $200,000 or $300,000 on a joint basis. Non-accredited investors typically do not meet this criteria. An angel syndicate is a fund created to invest in a single startup that pools capital together. Investment stage, it is where the company is in their growth cycle. Angels generally invest at the earliest stage, the pre-seed, which is friends and family or seed stage. And then you may hear things like Series A, B, C, D as they continue to grow and raise capital. And diversification, angels building a portfolio of investments across areas to increase likelihood of an overall positive return. All right, with that, maybe we can go to the next slide. Sure. Amazing. I'm excited to have as our guest today, Sydney Lai. Sydney, maybe we can start off with just a quick introduction and background from you.
Hey everyone, thanks for that introduction, Sandeep and Cheryl. My name is Sydney Lai. I'm based here in New York City. I spent the last 8 years in Silicon Valley, and I began my career in private wealth, meaning I worked with a lot of limited partners, family offices, and then through that, I started working at a very small VC fund in South Bay. During that time there, I got to work on several different funds where we invested anywhere from esports, VR, I mean, you name it. And this was actually back in 2014. And, fast forward, I ended up joining a lot of early stage companies, working directly with the founders, helping them on business development, revenue, user acquisition, and really helping that founder finding that traction and those metrics to go fundraise with as well. I then moved over to New York City 4 years ago, where I worked at Consensus and did a lot of fundraising there. And now I continue my career in angel investing. Throughout my time, I've raised 36 million for companies. I have a portfolio of 5 of my own with 1 exit. And yeah, now I'm part of Next Gen Venture Partners. We're based primarily in DC, but really, across the US. We really like to work with seed stage companies, and I'm happy to tell you more about that.
Awesome, thank you for that. Let's start at the beginning. When we talk about angel investing, what's the high level process of how deals work? Where do you find them, and where do you get started?
Yeah, where do you get started? I would say the highest level, there's really 2 ways that I look at it. One is either you are there looking for deals, or you have deals that are coming to you. When I say deals coming to you, it's really who's in your network, what other folks are you often talking to. So it's not necessarily other investors. It could also be community organizers. It could be other startup founders. But on a high level, when you're going to approach angel investing and looking at different startups, it's really understanding what kind of value can you provide for them, and how do you find essentially this kind of deal flow?
Got it. When you find that startup, what are the first things you do? Let's say you find an opportunity that's come in, maybe through Republic or maybe through your network. What's the first thing you do? What are the top things you look for?
Yeah, that's a really great one. In terms of the top things that I look for, I know the first thing I think of is, does this align with my thesis? I think it really depends on what kind of investor you are. Do you believe in a specific vertical? Do you have a specific thesis? Do you mostly care about the team itself? Just as a great example, actually earlier this morning, someone came to me, they were bringing me a hardware tech company. And I explained to them, this looks like a great opportunity. However, I don't invest in hardware. I know that even in my network, not a lot of them invest in hardware as an example. So I'm not sure how much value from one investor to the next I can provide for you. So the first thing that I really look at is, does it qualify, right? Does it go off and check off my checklist? And then I think number 2, the second most important thing that I look at is me understanding immediately, is this going to be a value-based investing, or is there some sort of strategic relationship that I can also provide for them?
There's so much to unpack there, and I have to just to level set. What is a thesis?
Oh, great. Okay, so a thesis is really understanding what kind of investment deal you think makes sense, right? So a thesis could be something as, look, there's a clear demand for food delivery services right now, or there's a clear demand for software. That's one example. Another example could be, hey, everything has been digitized. I believe that there's a clear thesis for community-based applications, community-based startups that has that viral effect. So really understanding what is your belief, either from a business aspect, a value aspect, but also your belief in what kind of technology that you can either add value to or that the market really, really needs.
So if I can just repeat back before we get to the next question, my understanding from your approach, it's you've written down things that you would call your thesis. Let's call them areas that you are excited about or interested in. And you've written down, you said check boxes of what you will maybe not invest in. For example, hardware may be something that you have a list and you say, if it's hardware, I'm not going to invest. And those are decisions that you made for what you were interested based on your background and what you like to get involved with. Is that right?
Absolutely. And I think it also depends, you have a lot more liberty on your thesis if you in the audience are an angel investor. Now, if you're at a fund, then the fund itself will have their own thesis, and you being part of the fund want to follow that thesis or that guideline.
Got it. Let's get back to the questions that we had, but I may come back to that intro because again, there's so much just right there.
Yeah, I could talk forever about this.
No, this is angel investing 101. It's a lot. How do you build your pipeline / know when companies are raising? Cold outreach emails from founders work?
That's a really good one. I'll start with the cold. I'm going to work backwards. I'll start with the cold emails first, and then I'll move into the pipeline. I think the emails really does work if there's two things. Number one is, again, if it's relevant, right? If I'm getting an email from someone, and like I said, if it's hardware or something that doesn't align with my investment thesis, then you're probably not going to hear a response from me. Or if so, I might just respond, hey, this isn't too relevant, try X, Y, and Z. So the question is, does an email work? It really depends on the investor's thesis, the fund's thesis, the angel's thesis, because if it's not relevant, then there's not much that they can do right there. I think number two, honestly, this is just my personal opinion, if the email is too long, I can't read it. There's too many words, right? And I think you really have to get to that value very, very quickly. We get a lot of pitches, not just from founders, but even other investors who say, hey, would you like to co-invest in this? Would you like to look at this deal? And it just really depends on if you can capture our attention and that value within, honestly, 2 sentences.
Makes sense.
Yeah.
And then,
the second part of the question, right? So the second part of the question was, you mentioned for angels, how does deal flow look like, right? So as you can imagine, different investors, different funds, different angels, we all have different ways where we grow our pipeline. I think that, at least for myself specifically, I'll share that. It really comes down to, I know that I keep going on this, community is a very, very big piece. Community is a big piece because community, there's a gathering of people. A lot of the teams and folks that I work with are accelerator programs and other funds, frankly, because when you have either accelerator programs or other funds or other angels, what happens is we have a pool of companies that we're already looking out for that we understand. And then also we're able to contribute to each other's fundraising. That's where a lot of it comes from. I think number two, at least for myself, this goes back to that thesis. If I know, let's just say as an example, I'm focused on specifically, blockchain, right? If I focus specifically on blockchain, I know what my thesis is. Those are the companies that I'm looking for, as well as I know other funds in both the Valley and in New York City who have seen or come across or done diligence on those teams. And so if I have a thesis, what that means is I am able to be more proactive in finding the right teams, and they also know of me. So really, The question comes back down to two in terms of pipeline building for getting introductions to companies is one, your network, your group of friends, your professional network, and number two, understanding what you're investing in, what your thesis is, because surprisingly, you're actually able to target that pipeline a lot easier.
Let me just repeat back what I heard here. So cold outreach can work if it's relevant and if it's in your thesis, and maybe if there is a founder that's going to do some cold outreach, it would benefit them to make sure that the person they're reaching out to would be interested and maybe a fit. So it's not necessarily a waste of time. And then you build your pipeline a lot by network and sort of being known for something within the ecosystem. So the kind of deals that you would want to invest in that are on thesis gravitate to you because you sort of build a portfolio and are known for those deals. Is that right?
Yeah.
Awesome. What is the benefit for startups to even seek out an angel versus, let's say, a VC?
Yes. This is a very, very good question. I'll share this from my perspective. I think oftentimes, and this comes from a very true place in my heart, because when I look at it this way, sometimes, as you can imagine, the really famous funds, they've got brand names, they've got bigger checks, they've got a lot more resources. And I think at the end of the day, when startups ask, do we raise from a seed stage fund, maybe they're a new fund or an angel, what I typically recommend is that you really want to understand what is the value that you want to receive from that specific fund or that specific angel. For easy math, let's just say it's 100K. If the 100K is exactly the same, which one do you prefer? And why, right? So if it's a fund, is it because they specialize specifically in e-commerce, right? And maybe they have a slightly bigger staff, right? Maybe there's 4 or 5 people at the fund that can provide you a few extra resources. Perhaps that's not as relevant to you, but you see there is an angel who has built and exited 2, they're a serial founder, right? They've had 2 e-commerce companies sold, went public, whatever that may look like. And they can provide very tailored one-on-one, just either mentorship, peer mentorship, something like that. And you can find that as more valuable. I think that's honestly the best way to really consider if you're going to get, let's say, 100K, what kind of relationship are you looking for? Or maybe you're looking for something a lot more hands-off. And that's another way to make that consideration.
Awesome. Again, just to repeat back, not only for my benefit, but for folks in the audience, as you decide between the two, it really comes down to what the founder is looking for, especially if they're looking for more than just a check and looking for value add, figuring out, hey, is it the angel that's maybe been there before, or maybe it's the VC that has an expertise in the area, et cetera. Great. So let's talk about, there's all sorts of angels out there. This kind of goes back to the thesis and check boxes that you alluded to earlier. How do you determine what kind of angel you are? Is it personality? Is it risk? How do you decide what kind of angel you want to be?
Ooh, absolutely. That's a really good one. I think about this a lot. I think I personally, I go between, do I want to be more of a generalist with thesis, meaning non-vertical specific, or more vertical specific, right? Is it SaaS? Is it blockchain? Is it AI? Good tech, whatever that may look like. And especially when it comes to risk profile, what I've had to really understand is reviewing the portfolio companies that currently exist, and also understanding, are we on track to having a likelihood of having an exit event, such as going public or getting acquired? I think that's going to determine a lot in regards to what kind of thesis one should form. I think it also depends on the risk profile, right? The risk profile, if you think about it this way, a lot of angel, seed, early stage investors, I like to say we have an appetite for risk. We have a vision. This startup may or may not make it, and you're really, your bet is beyond just the check size itself. And if you're looking at the portfolio or the risk tolerance of other investors, maybe they're later stage, maybe they've skipped the J curve, there's a clearer path to a return. That's another understanding of, like, what is your risk tolerance, right? Risk tolerance can also determine, depending on your vertical, are you betting on more emerging tech, or are you betting on something that has a very clear unit economics, such as, again, SaaS or marketplaces, right? So when it comes back down to what kind of investor you want to consider yourself or to explore, I would really look at what makes sense from a financial and business standpoint. And frankly, number two, what are you most interested in or what you're most excited about? Because as an example, let's just say, I think this is a great example actually. Right now, there's many investors or funds that I've spoken to, and they say, hey, we invest in everything except med tech. Hey, we invest in everything except healthcare tech. And now this COVID situation, and now all of these investors, oh yeah, we also invest in healthcare and med tech. And just as an example, regardless of the market, healthcare and med tech is just something I don't touch, is not something I look at. So it really just depends on your interest and your belief in the future of that tech vertical as well. Yeah.
Got it. Thank you for that. Again, to repeat back, when deciding what kind of angel investor you are, maybe a couple of things. One, it's we all know investing in startups is risky, but keeping in mind the risk-reward ratio that you're comfortable with. Some businesses may be less risky, still risky, but less risky, but may not have the massive upside potential as another one. Is that right?
Yeah. And you're talking about the unit economics right there. Absolutely.
And then the second piece of determining what kind of angel you are, it really comes down to interest, because not only are you investing your capital, but if you're an angel investor, you're likely investing a little bit of your time and energy, because you'll hopefully want to support the portfolio company once you invest. And so being sure that it's something that you're excited about and can remain excited about. Is that right?
Absolutely. And I think there's one more thing there, especially is the team, right? I think ideas change a lot. Ideas pivot a lot, especially in such early stage. And I've approached teams where it's like, wow, I love this idea. This looks perfect. Then you meet the founders and it's just this awkward coffee date. And you're like, man, there's really not that chemistry. And you have to really remember, it depends on what kind of investor you are. Are you more hands-on or are you more hands-off? If you're more hands-off, that's okay.
Yeah, I think that's an important point. I think I appreciate you saying it, and it's easy to forget that ultimately you're investing in the founder, not the idea.
Because the ideas will change. I've had many ideas change. I'm like, well, I guess that's not what I invested in, but hey, I still believe in you.
There you go. What kind of returns are you looking for, and what % of your portfolio are you predicting will succeed? I know that's a really tough question. Things change.
Yeah, what kind of returns am I looking for? And well, I know two teams are looking rough. I know two teams are looking rough. What kind of returns? I won't speak for NextGen specifically. I'll speak for my own personal portfolio. And for that, I think to be frank, I don't think I have that locked down yet. And it really comes down to me really figuring out, again, is it what is the horizon that we're looking at, right? What is horizon we're looking at? And also, how long can these companies last, frankly, until they can hit the horizon? I think oftentimes when you look into an angel investment deal, it really, like, one, you want to determine what is their pre-evaluation, and also understanding, are you frankly priced out, or does it make sense? I think it also depends on the check size. If you're making an investment, are you doing it primarily because you are invested in the team and there could be a family and friends raise and you really want to succeed, but you know that if you put in X amount, you might not get the return that you would on another type of investment, right? Now, if you look at a specific fund, right, so such as NextGen, I won't get into the specifics of the detail, but when it comes to NextGen, then what we're looking at is a substantial return, because you have LPs that you have to really show up for, right? You would need to show a return for. And I think that's a huge difference when it comes to angel investing and even C-stage companies. Oftentimes, founders or other investors will come in and they want to really understand, if we're raising, let's say again, 100K from investors who are solo or a fund themselves. For an investor, what we have to be accounted for is frankly ourselves, right?
Yeah.
We have to show that performance for ourselves. And to be frank, I can be a bit more liberal, right? Is it 2X or is it exponential, right? You don't really count for the ones that are exponential, but you do count for the ones of like, okay, that one's looking rough and that one's looking rough. But when it comes to seed stage funds, then you have limited partners, endowments, other accredited investors or QPs, and then that metric and that kind of return is going to look different. And you always hear the 10x, right? I think 10x is often what you hear about, but it also depends. Sometimes it's 4x, 5x. It really depends.
Got it. So let me repeat back what I'm hearing and maybe throw in a couple definitions. So for folks who don't know what LP means, it means limited partner. For a lot of these funds that are investing, they've basically raised capital from these limited partners and are investing capital kind of on behalf of those limited partners. And so to your point, Sydney, the returns that they might be looking for are different because they've been communicated to this group and their targets to hit, et cetera. But as an angel, what I'm hearing from you is it really depends. If it's a friend and family round, you may be a little more liberal with your return expectations.
Exactly.
Are getting to know and you're maybe making the investment strictly for a return reason. Let me ask you we have one last question before we get to Q&A. So I think I have time for just one off script question. If you're not looking for an explicit return, let's say if as an angel investor, you're not saying, oh, I had this dollar and I could invest it in the stock market, I could invest in this, so I'm going to invest it in startups because I'm looking for X return. Why invest? Why are you an angel investor?
Oh, that's a really good one. I think there's two main things, right? It's absolutely true. Let's say if it's, again, 100K, you could put it in this investment, a home that, what is the value that you're going to get if it's not monetary? I think that is your question.
Well, it's what else factors into the math?
Okay.
You're part of it, so right?
I'd say
not the only reason potentially to invest.
I'd say there's two main things, and I think it really comes down to that original question of what kind of angel investor are you? What kind of investor are you? I'm willing to put money down for that network. I'm willing to put money down for deepening that relationship, or I'm willing to put money down to get a seat at the table, right? So getting a seat at the table could be, there's other firms, other investors that are investing in a specific deal, and I'm happy to fill out the round, participate, top off the round, if they need another angel or fund to come to the table, because I believe in that investment strategy of that fund. I believe in that other angel who's leading the syndicate. That's one example of participating to be able to deepen that connection and really continuing to grow that community. I think that is often talked about, networking community, and hopefully you start to understand that part of the process of angel investing, may be the deal flow or providing value back to your founders, is really what kind of relationships can you build, and that may or may not see the type of return that, let's say, putting in a dollar amount could give.
Got it. Thank you for that.
Yeah, thanks.
Last question before we get to the Q&A from the crowd, and we may not have time for it, but what have you seen in the midst of COVID and sort of any suggestions as to, again, as an angel investor, if you were to talk to founders who are on the call, any advice to them as to how to raise from you and from angels?
Yeah, that's a really good one. I didn't realize questions were coming from the chat. But so the question was, how would you advise or share on how founders can go and raise from other angels at this time?
In the time of COVID specifically, right? So, in this COVID situation that we're in, what are you seeing? And if I wanted to get in front of you.
Two things. One is from the perspective of another investor, and then one is the perspective of what I would typically recommend to a founder. So from an investor, again, I had this call, let's say 2 weeks ago, and when I was speaking to him, he's also an angel investor, and we were talking about deal flow, and right now he's not actively investing. So just because they have the title or they're a part of a firm or by themselves, I think one really important thing to understand is, are they actively investing or they're not investing? If they're not actively investing, they have various theses or reasons why they're not actively investing. And that could be they want to know when the new economy is. Number two, they might not have a thesis for a outlier crisis such as this, and how does that look on their investment thesis? Maybe they haven't come to a conclusion, and because they don't have an appropriate thesis, they might not be actively writing a check. And now I can go even deeper in terms of who, when, why, and how to identify who's actively investing. That's a whole other conversation. But I think the first thing to understand while you're investing or looking for fundraising during this landscape is if they're active or not, frankly. Number two, on the on the founder side, when you're trying to figure out, hey, I'm a founder, is it a good time to raise right now? Is it not a good time to go and raise right now? It's the hard conversation, and I get this a lot, which is, does your revenue make sense, right? It really comes down to the BD aspect of, does it make sense? Because if you're going to make net neutral, new relationships with funds, that you might as well work on your business development and get that traction and that revenue. But it really depends. I mean, that's too hard to determine on the startup, or go and raise. I mean, it really depends. Yeah.
Fair enough. And just to quickly repeat back, so as far as what you're seeing in the COVID area, it's just you're seeing some investors not investing, and so some sort of thoughts are, if you're a founder looking to raise capital, make sure the person you're talking to is actually deploying capital, and that you're on thesis with maybe this new reality. And then the second point of angel investing, it's actually I'm totally skipping. I know I'm running into time. So anyways, anything else you want to cap with? If not, we have to move on to the next person.
No, Sandeep, thanks for having me here. It's been great chatting with you. And yeah, those are fun. Thanks.
Awesome.